Ladies and gentlemen, good day and welcome to the Man Industries India Limited Q4 and FY22 earnings conference call. As a reminder, all participants are in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Mr. Mahantesh from Man Industries. Thank you, and over to you, sir.
Good evening, everyone. This is Mahantesh, Manager Investor Relations from Man Industries. I welcome you all to the Q4 FY22 earnings conference call of Man Industries India Limited. I have with me from the management Dr. Ramesh Mansukhani, Chairman, Mr. Akshay Gupta, CFO, in the call. We'll have a brief opening remark followed by the Q&A from the management. Please note this call may contain some forward-looking statements involving risks and uncertainties. Listeners are requested not to put undue reliance on facts presented during the call. Let me begin by giving a brief of the considered financial performance of the quarter and the year gone by. For the quarter, we have registered a total income of 629.6 crore, a growth of 13% year-on-year. This is on account of better execution of orders. Our EBITDA stood at rupees 56.5 crores compared to 58.9 crores, a slight decline here. The profit after tax stood at 26 crore. For the financial year, we registered a total income of 2,175.7 crores with an EBITDA of 217.7 crore and a PAT of 101.6 crore. During the year, we witnessed withdrawal of incentives under MEIS scheme by the government and no new export incentives for our industry, along with higher prices of major commodities. Despite this, we were able to pass through the situation and maintain our profitability levels. Coming to some of the sector highlights, during the year, oil price went to a multi-year high on the back of increasing economic activities. Rising demand, OPEC Plus plans to gradually increase the output, geopolitical tension, etc. This is a positive development as investments are expected to increase in oil and gas infrastructure, thus benefiting companies like us. We are seeing very positive signs in the overall market as many oil and gas companies are focusing on improving and expanding their existing pipelines. Number of projects coming under bidding sales have seen a good uptick. The gas industry and the gas processing countries led by China, India, Russia, Australia, and United States and Brazil are pushing ahead with plans to commission tens of thousands of kilometers of pipelines in 2022. With thousands of kilometers scheduled to be commissioned between 2023 and 2030, the global gas network is poised for a large, rapid expansion, giving an outlook at the opportunities the sector has to offer in the future. It is anticipated that the energy demand in India is growing faster than all the major economies on the back of continuous robust economic growth, government support, and measures. India's oil demand is projected to rise at the fastest pace in the world to reach 10 million barrels per day by 2030, from 5.05 million barrels per day in 2020. National gas consumption is forecast to increase at a CAGR of 4.18% to 143.08 million tons by 2040, from 58.10 million tons in 2018. Now I will hand over the call to Mr. Ramesh Mansukhani, Chairman, for his brief remarks.
Thank you, Mahantesh. Good evening, everyone, and a warm welcome to this conference. I would like to say we continue to see strong traction in demand, which is reflected in our order book, which is on date around 1,300 crore. This is the beginning of the year, and this will be executed within next 6 to 7 months. Our bid book stands approximately 15,000 crore as on date. Their bids are in various stages of evaluation, and we expect to good book size order over the next few months. Recently, the Government of India has increased the export duty on steel, which will help softening local steel prices. These measures by the government will be beneficial for manufacturing like us as it will help in reducing our raw material cost and help in margin improvement going ahead. I am delighted to share with you all that during the year we have incorporated two wholly owned subsidiaries, Main Offshore and Drilling Limited and Main Steel and Tubes Limited, with a view to diversify our product offering under the said subsidiaries. The steel bending process and connector hot induction bands products under the Main Offshore and Drilling Limited is likely to be completed soon, maybe in 1 quarter. Under this project, we would be able to make steel bands in-house, which would help in the margin improvement. It's a value-added product. On the ERW, the work is going on full swing. I'm happy to share that the work is, and we expect the project to be completed by end of this calendar year. With a view to further diversify our product offering and enter value-added product segment, we are undertaking a capex of approximately 470 crore under our wholly owned subsidiaries, Main Steel and Tube Limited, to manufacture seamless steel tubes. These tubes will be used in the defense, fertilizer, petrochemicals, dairy, pharmaceutical, etc. This unit will come up at Anjar. The work of this already began or acquired. Construction is going on. Major equipments order, the long lead already placed, and we expect the project to be completed by Q3 next year, Q3 24. With our enhanced manufacturing and excellent execution capabilities, we are confident to scale our business in the near future and deliver consistent growth. This is all from our side. We can now open for call up question answer. Thank you, sir. And now your question answer, we will be glad to reply.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their telephone keypad. If you wish to remove yourself from the question queue, you may press star and 2. You are requested to use handsets while asking a question. We will wait for a moment while the question queue assembles. We have a first question from the line of Navid Virani with Bastion Capital. Please go ahead.
Hello, am I audible?
Yes, you are. Please go ahead.
Yeah. Thank you for the opportunity. So firstly, want to understand the nature of our margins better. So gross margin for the year is materially down, and it is almost higher compared to Q4 of last year. It is difficult to understand these kind of fluctuations given the reverse bidding mechanism which we have in place. So can you please help us understand the reason for such wide fluctuations? And also, can these kind of fluctuations be seen in the future as well?
Okay, Mr. Virani, thank you for this question. It's a very complex business design, but we will try to help you clarify. The quarter to quarter depend on what kind of projects we are taking, what is the value addition in a particular job, what is the steel grade and the pipe grade, dia, thickness, lot of calculations are there. The last year was purely because of the commodities prices gone up. They were unpreparably. Although we always say, and we stand on our whatever saying last few years, most of the steels we booked back-to-back basis. But Apart from steel, some other commodity also we are using, like some chemicals, some plastic, which is based on the commodity prices, which is beyond the control. But despite of this commodity circle, super circle, whatever you can say, we managed to achieve our profitability despite commodity, despite MEI's discontinuation from the government of India on export incentive. But now in the few days, the softening of the commodity prices, the government measures to put the export duties and some reduction in import duty of the inputs, and as well as to in substitute to the MEIs, etc., is a very strong working conditions is improving. So we hope these fluctuations will be very less in this current year, but we are a very careful country. Normally we hedge our raw material immediately, but the things are beyond control sometimes, which affect we always try to control.
Right. So, 30% kind of a gross margin number is something which we can keep in mind going forward as well?
Gross margin?
Yeah.
Yes, you can say.
All right.
Yeah.
All right. So, sir, coming to our presentation, so we have shared an opportunity in one of the pages of our presentation saying that the hydrocarbon space also provides a very good opportunity for us going forward. So can you please elaborate on this front further to have, for more clarity in mind as to what kind of exact opportunity are we alluding to here?
Okay, sir. The hydrocarbon sector, because of the crude prices and gas prices worldwide last 3-4 months, and even the last 6 months, so 3 months more after Ukraine war, then the prices are hovering more than $100 oil prices, gas prices also increased worldwide. So now the lot of projects, because of the COVID and some other economic conditions, they were stuck up last 3-4 years. Now all these projects worldwide is coming to putting their investment to increase their capacity, and the pipeline transport should be more to improve the more transport system. It is they are putting up. That's why worldwide lot of projects are coming. That's why we are seeing our capacity utilization will be much better than last year, as well as to study in the commodity market. Some government measures is going to help us, and we are anticipating good growth in our turnover this current year 22-23. In the same field, we are anticipating 25-30% our aim to achieve more compared to this year with better EBITDA, which we are trying. The current year will be better as we are expecting. And other products I have not done and not told anything. Other projects are coming under implementation, election commissioning in few months. Their turnover will be more and above of the whatever I said, 25-30% growth we are aiming this year.
Right. So next up, just wanted to understand that the total amount which we have shared on the in the presentation, the total capex amount amounts to 715 odd crores. So just want to understand how much of this capex has already been done, and how are we planning to fund the remaining capex? If you can share a rough debt equity mix, it will be really helpful.
Yeah, I will hand over to Mr. Ashok Gupta, our CFO. He will brief. As on today, there is no term loan in our books. It's a zero debt company. We have some surplus cash, some banking arrangements, and some subsidiaries loan in the subsidiaries company. He will give the insight of the projects which is coming.
Good afternoon, Mr. Navid. This is Ashok Gupta. See, as regards our capex program undertaken by the company, we have taken three projects, one ERW pipe along with the upgradation of about 250 crores and further project of 470 crores for our stainless steel pipe and tubes. Out of the projected capex, we have incurred because this capex started last year Q3, Q4 only. So we have already procured our lands. Almost 40-45 crores of investments has already been happened as on 31st March 2022. As regards debt equity, all the funding arrangement for the ERW as well as stainless steel is already in place. And in case of ERW, that LC is worth more than 100 crores that has already been established. And we are expecting the equipments to be delivered in the next couple of months. So, in all probability, ERW should be operational by end of this calendar year. And as regards stainless steel, the progress is on, and the ordering for major equipment has already been done. And we expect these assets to be operational by end of FY22.
All right. That's helpful, sir. And sir, lastly, I have a bookkeeping question regarding creditors. So the number this year is showing a steep rise. So can you please, help us? Why is that the case? That's it from my side.
So in the case of this payables, most of the LCs got opened in Q4, and the material what we received that has all been under LC. This is which will be due in coming quarters. So that's the reason this payables is almost about 700 crores. But if you see our receivables are 550 crores, as well as we have some surplus cash of 250 crores, over and above our stock of 300 crores. We are in compliance.
Okay. Thank you. Thank you, and all the best, sir.
Thank you.
Thank you. We have a next question from the line of Manish Gupta from Solidarity Advisors. Please go ahead.
Thank you for the opportunity. So some questions on your balance sheet. In your balance sheet in non-current assets, you have some trade receivables of 73 crores. So can you just explain what are trade receivables in non-current assets?
मनीष जी, अशोक गुप्ता बोल रहा हूँ. ये जो नॉन करंट receivables, that is around 73 crores. These are the receivables outstanding for more than 3 years, where we have filed arbitration cases against these recoveries. So, and now because of the new requirement of aging to be given in the face of the balance sheet, and these outstanding is more than 3 years, that is the reason we have shown these receivables under non-current assets.
Okay, and therefore in your trade receivables under current assets of 544 crores, what is the aging on that?
Out of that, 525 crores is like between just a second. It's from less than 6 months. 451 crores is less than 6 months, and 6 to 12 months is around 70 crores.
70 crores.
Yeah.
Sorry, so you said 70 crores out of the 544 is more than 6 months.
Yeah.
So which parties are these, sir? Are these disputed receivables?
No, this is all undisputed and regular receivables are there. It is basically from all the PSUs and from export receivables.
Okay. And again, in under your non-current assets, you have other non-current assets of 76 crores. What are these?
Other non-current assets, 73 crores.
No, 73 crores was trade receivable. And just 2 lines below that, you have other non-current asset of 76 crores.
Only the other non-current asset is 72.64 crores. You are talking on consolidated.
Yeah, I'm looking at the consolidated.
Yeah, major out of that 76 crores, 70 crores is this advance given against our proposed office premises, which we are planning to buy for our office space. This amount is that amount is appearing same as last year also.
Last year it was 107 crores.
Out of that 107 crores, 70 crores of this advance against office premises and 31 crore against one property which we bought from PNB under surfacing. So that dispute is over and we have taken the possession of the land and we are in the process of monetizing during the current year.
Okay. And sir, in your cash flow statement, you show a bad debt of 19 crores. Now, is this 19 crores bad debt? If I go back to the Concall balance sheet, your trade receivables, which you said 73 crores was over 3 years. Last year you showed that only as 25 crores. So, I don't know how you reorganize the balance sheet, but out of the 19 crore bad debt that you have written off, is this against receivables that were like this over 3 years?
Yeah.
So, if you cannot recover the 73 crores, will you write this off at some point in time?
Not really. We are fighting against all at various stages. These matters are pending with various levels in the judicial system, and we are sure that we are going to recover those 374 crores what we are showing as outstanding more than 3 years. But for good corporate sake of good corporate governance, the management had decided to provide for some expected credit loss with the ECL in the books. So there should not be any surprise all of a sudden in the coming future.
Okay. Now, in your cash flow statement, you have 45 crores as investment in purchase of property, plant and equipment. But in your balance sheet, the capital work in process is shown as about 20 crores. So where is the balance 25 showing in the balance sheet?
This around 25 crores that has already been capitalized in the FA, and around 16 crores is shown as a capital work in progress.
But sir, your depreciation is the same as last year. So if I look at non-current assets, it is reduced from 326 to 311. So the property, plant and equipment has reduced by 15 crores. The depreciation is the same.
You have to add the depreciation for the current year. The closing balance of the last year plus depreciation minus closing balance of the current year. The difference is around 25 crores. That is being a new capex for the current year. The capex it was capitalized during the current quarter only. So that's the reason you cannot see much impact on the depreciation.
Okay. And so the last question is that can you give a little bit more detail about Merino? Where are we in that process?
Just a second.
Yeah, Manish. Actually, we settled down the issues Merino, and the documentation part is going on. And the other side, the disposal of the property also in very advanced stage, as well as the 31 crore property, whatever we acquired from PNB, also we are monetizing. So both the assets in hopefully next 2-3 months, every quarter 2 will be monetized both the properties.
So, do we have a term sheet? When you say documentation is happening, are all negotiations complete, or and the documentation is converting the term sheet into a firm agreement? Or, do we have a signed term sheet between all parties so that the dispute is resolved?
No, there was some offer. We sent the acceptance, and then the other documents are under preparation. But there is 31 crore we had taken the possession through court, where in Bellary, Koppal, where the bit is documented, and we got the possession, and now we are disposing. And we got the letter from one of the company over there. They want to buy, and they discussed with us 2-3 times. They came and met us, and they said, once you get the possession, and then we are ready to take. So now we got the possession last week. We got the documents from the bank yesterday, on Saturday, and this week they will come again and we do the final agreement for sale, and we get the money.
Okay. But so there will be no more outgo that Man Industries will not have to pay anybody any money to settle this, right? If anything, you should get some inflow.
Not at all. It will come to Man Industries, not any outgo.
Okay. And the last question I had, sir, thank you for allowing me so many questions, is the 400 crore stainless steel project, when it finally goes on stream, what are the broad economics we expect that, this 400 crore stainless steel project, what EBITDA should the 400 crore investment generate at steady state?
The industry EBITDA is right now is around 25%. We are anticipating in beginning we should achieve between 20 to 25%, depend on product range, which product range we are selecting, what is the market condition, what product mix is favorable to the company. A lot of calculations are over there, and we choose our technology accordingly. So then we are anticipating the better profitability for Man. As well as Man now is putting 100% money in this venture. Earlier was little bit promoter, and this in that combination we changed already. Now the Man will be 100% on.
So I think it's very important that Man owns 100% of this thing, sir, because if the interests are not aligned with minority shareholders, I don't think that will be very nice from a governance perspective. So thank you for aligning all interests under Man Industries.
Okay, thank you, sir.
Thank you, sir. That is all from my side.
Thank you, Manish.
Thank you. We have next question from the line of Chirag from Keynote Capitals. Please go ahead.
Hi. Thanks for the opportunity. My first question is related to stainless steel plant that we have. What kind of asset turns are we expected them to generate? Hello.
Roughly we are roughly 2.5 times we are anticipating in the beginning, but apart from that, some value addition we also do. Some other equipment also we are going to use to increase the range. Then it will go slowly 3 times. But in beginning we are 2.5 times in beginning.
And this includes all the working capital also, just based on gross block?
What do you say?
Can you come again, please?
I'm asking that the 2.5 times of asset turns that you said, is it based on just gross block or is it based on working capital too?
It is based on gross block.
Okay, thank you. When are we expecting this to start, or when are we expecting it to operationalize, the stainless steel plant?
And it will end of next financial year. Because
by end of FY22.
The equipment is 12 to 14 months.
Okay. So I have one question related to the other expense that we have. I'm looking at last 8 to 10 quarters, and I see a wide fluctuation in other expenses, which comes from 50 crores to 150 crores range. I just wanted to understand why is this so highly fluctuated, and what percentage of these other expenses are fixed and variable?
Chirag, what happens is that all depends on what kind of the mix of turnover we have, whether we are serving to the domestic market or we are serving to the international market. Whenever we are serving to the international market, the other expenses increase mainly on account of these overseas freights. Last year, if you see FY 2021, we had exports of about 1,700 crores. So that's the reason in the overall FY 2021 and FY 2021-22, there is a gap of around 70 crores in the total other expenses. If we talk about Q4 to Q4, our Q4 FY21 Q4 was about 150 crores, whereas this year we have 55 crores. Last year, we had a write-offs about 70 crores in Q4 and some good amount of export trades. Current year, there is hardly any exports in Q4, so that's the reason our other expenses are well under control. And the return of amount is around 19 crores as against 70 crore last year. Again, if we compare our other expenses with this Q3 of FY 21-22, where it was around 37 crores, where around 65 crore amount was on account of some job work charges which we have paid for some job work order. So job work charges, again, it's a part and parcel of other expenses, which is not there in the Q4. So that's the reason, it is the main reason for fluctuation in the other expenses in the current Q4 versus corresponding Q4 versus previous quarter.
Understood. Sir, one of the earlier participants asked you the sustainable gross margin, which you said it is around 30%. Am I correct?
Yeah.
Okay. Sir, last question I wanted to ask that in last 2 quarters, in FY22, we have said that the ERW steel plant as well as the steel wings would commence by Q1 FY23. And currently it has been shifted to Q4 FY23. So could you let us know what is the reason for the delay?
Oh, because of the COVID and some equipment.
Because there are some equipments are supposed to come from China, and you know that some from Korea, and you know that still China is struggling on lockdowns for against COVID. So there are reasons for they are getting equipments delivered equipments getting delayed, which was supposed to be delivered by now. It is going to take around 40-45 days to be received.
Got it. Understood. So if I just can add one question, can you let us know can you bifurcate your active bid book into oil and gas and water transportation?
Right now, you are talking the future or past?
So could you repeat? Your voice got cut.
No, you are talking about the past or future?
I'm talking about active bid book, that 15,000 plus crore that we have.
This is mostly oil and gas. Maybe you can say 85-90% from oil and gas.
Got it. Thank you so much.
Thank you. We have next question from the line of Anirudh Agarwal with AAA Investments. Please go ahead.
Yeah, hi. Thanks for the opportunity. My first question was on the volume numbers for FY22, which you can share for ETSO and ELSO.
Volume right now we have not gone, only we gone to the figure. The volume still we are not here in the meeting.
Okay. So Gupta sir, if you could get that shared offline, that will be helpful. And so you spoke about turnover growth of 25 to 30% this year. So where is that growth coming from? More domestic, international, oil and gas, water? If you can just help us with that.
We are targeting both the domestic as well as international market. This year, FY 2021 we have an export of 70 in the ratio of 75-25. 21-22 again it is in 25-75. So we are targeting this year equal share in the top line.
Right now 1,500 crore domestic. Now international bidding is going on, where our strong position is there, under evaluation. So we hope to get the better order in the export also. We will see the combination both. maybe 60 and 40, 60 domestic, 40 over there, or maybe 50-50 we are trying, and the better capacity utilization as well as to more value-added products.
Got it, sir. And so the recent steel price correction, how much margin gain does that translate into for us? I know a lot of it will be back-to-back that we have covered, but to the extent that it will benefit us, how much margin benefit do you expect this year?
Yeah, Anirudh, regarding steel, as we always said, it's mostly back-to-back, mostly. Not 100%, but 90% back-to-back. But other items also going to get the relief, like chemicals, plastics, diesel prices, which is directly related to the transportation charge, etc. So these all small segment also going to give the benefit to the company. That's why rather than back-to-back arrangement of the steel, the other also going to improve it. So as we understand, whatever last year we couldn't get the benefit of this kind of things, this year we should get it. I cannot quantify, but definitely softening of all the commodities, diesel prices, it is going to help the company.
Got it. So, currently, given the 1,300 crores order book and one large order that we have, what is the sense on margins this year? We did 10% EBITDA this year. This year, what is the sense?
This year we are expecting EBITDA margin definitely in double digit, more than 10%.
Right. And on the ERW business, so what would be the guidance in terms of both top line and bottom line once we have the capacity on stream?
Yeah, the total capacity is 125,000 ton, and on the product mix basis, what kind of orders is coming from the market, it will decide by the time. We are expecting to start the production trial end of this year, calendar year. Quarter one would be mostly trial production and accreditations which we have to get. Accreditation will be not so difficult for us because we have the 4 facilities at our plant in Anjar. This plant is very close, adjoining to the plant. So we are, the fully utilization capacity would be the 22-23. If first year we do 50,000, 60,000 ton, then will be revenue 700, 800 crore more. We are aiming for 1,000 crore additional revenue from ERW. But apart from that, this year also our existing capacity, we are going to utilize more some value-added products, which we already said 25-30%, apart from ERW. So now you can guess it, what is our guidance. There will be growth this year, as well as growth will be 23, 24 also. The growth momentum will continue.
Right, sir. And on that 1,000 crores target, sir, what would be the EBITDA margins that we can make on this business? I'm assuming it will be higher than the current EBITDA that we're making.
ERW normally little bit much better than SAW. SAW in some segments, some projects we do 12-13% also. Here also we are saying maybe around 15% because city gas demand is much higher. And that's why we are maybe product mix EBITDA will be better than this year in the weightage average.
Got it, sir. And on SS pipes, sir, if I heard you correctly, we are again there targeting a turnover of 1,000 crores as per 2.5 times asset turns, 1,100.
Yeah, this is a separate company, subsidiary of the company.
Right.
The year one will be around 1,000 crore plus, and some other value-added products also will increase the more top line. The bottom line in this field is more comfortable because the value-added is much higher on product mix basis.
So, and which segments will we specifically target, sir? I mean, you mentioned quite a few, but which will be our core focus segments for SS pipes?
SS pipe, right now, we are doing only seamless. One seamless, 316, duple, and some high alloy items,
right,
which we are already targeting. Our equipments are being under construction according to the need of the market, whatever.
Got it. So your focus would be majorly on petrochem and defense, or any other segment also that we will have to enter in a major way?
You are very nearby. You are very nearby petrochemicals and then pharmaceuticals and defense.
Right.
Dairy products. Market is fast growing. Future is very bright. The market also growing not 5-7%, is much higher than other pipes. This segment.
Right, sir. And Gupta sir, on the capex guidance, if I heard you correctly, out of this 720 crores of capex, how much debt did you mention that we will need to take for funding this?
1:2 ratio.
Okay,
2:1.
In main industry is already done. 150 crore out of 265 our investment. And the subsidiary company, Mr. Gupta said, 2 is equal to 1, but within the subsidiaries company.
Okay, sir. Okay. And sir, on the next part, I mean, I understand that there are some capex investments that we're doing and so on, but from a shareholder returns perspective, we have an EPS of 16-17 rupees, net cash of more than 200 crores on the balance sheet, and you know where the stock price is, right? So why don't we look at, enhancing the dividend payout to shareholders? It will give a lot more confidence.
Sir, we already given dividend last month, 2 rupees per share, and now you are our partner. Now you should also realize how to improve the market. Our projections and our future plans, whatever we are coming, so then you can guess what is the potential of the company.
No, absolutely.
Dividend, yes, sir. Rather than paying dividend, we are deploying all the money in the new business, as well as, please try to understand, we are saving the interest for the company. 265 crore investment, new investment, 150 crore total borrowing, and the company right now is a nil borrowing, term loan, only working capital. So we are trying to deploy our own money. Money is not going anywhere. Whatever money is coming to the company, which is ultimately going to benefit you, sir, in long term.
No, absolutely agree, sir. But my point was that, with 200 plus crores of cash and the market cap of the company being only around 450 crores, I mean, we are not getting the deserved valuation in the market, right? So from that perspective, to increase investor confidence, if we can do that, that will really help the stock price. I understand
that better we have all the capex plans in hand, and whatever cash is being generated in the business, it is going to be again deployed for the business purpose only. Once all the capex programs is over and the business starts giving gains, then of course it is going to be distributed among the shareholders.
Right, sir. And finally, sir, on any update on the forensic audit after the last call that we had, any reply or revert from SEBI till date?
No further updates after that call of 12th May.
Nothing is there.
Nothing there. And so, final question, MEIS discontinuance, how much margin impact did that have this year?
See, our MEIS benefit was 3% of the FOB value of exports. It is a direct hit to our profitability.
Got it. So, on 25% was exports, you are saying, sir, 0.75% margin hit was directly because of this.
Yes, you can say.
But now the government is considering what percentage we do not know. It's a very, very active stage. We do not know this moment. Whatever it is coming will be good for the company.
Got it, sir. Got it. Okay. Thank you so much, sir, and all the best.
Thank you. We have next question from the line of Akshal Gazari with Robo Capital. Please go ahead.
Hello. Good evening. Am I audible?
Yeah.
So I just want to know regarding the guidance you had given in the previous con call that Q4 FY22 would be better than Q3, and you're confident of reaching 2,300 in revenue. So I just want to know what are the issues you face that you aren't able to meet your own guidance.
Sir, the guidance ultimately the guidance maybe a little bit 4-5%. If we give them guidance 2,300 and we are achieving around 2,200, it's hardly 5%. Maybe lead time of the special steel sometimes takes time. Sometimes clients lifting is a little bit slow. A lot of things are there. Sometimes COVID impact, etc. So guidance, maybe sometimes we do much better than guidance also. So these are expected revenue which we always try. But suppose there is a little bit behind last year. This year will be much more. We will make up things.
Oh, okay, fine, great. And I'm sorry, I was repeating the capex question again. From what I heard was that the debt funding would be 2:1.
Yeah.
Okay, and how much of out of 715 crores, how much of the capex has already been done?
Around 45 crore.
45
done, and the
LC for supply of equipment of more than 100 crore, that has already been established.
LC is already established. Material equipments are is coming on the way, which will be debited in near future.
Okay, fine, great. Okay, those were my questions. Yeah. Thank you so much.
Thank you.
Thank you. We have next question from the line of Shivam, an investor. Please go ahead.
Hello, sir. Can you just throw a highlight? I missed on the capacity utilization level. What was your capacity utilization on FY22?
You see, capacity utilization in our case is a product mix basis. What kind of pipe, what is the thickness, dia, grade, what is the, there's a lot of calculations there. But I can tell you, without putting additional money, we can achieve higher target for the current year and subsequent years, which we are trying. So our capacity utilization would be much better in this current year as well as to next year.
Sir, but a number, if you can highlight, if possible, a percentage number.
I do not remember in the tonnage. Normally we do not do the tonnage. We go in the meters and amount only. Yeah.
Okay. And sir, one more question that the competition, your competitive peers are investing heavily in DI pipes and you have been investing in ERW pipes. So any competitive edge that the ERW pipes of yours will have over the supply by the competitors in DI pipes?
Your question is not clear, sir. Please repeat it, please.
Sir, like you have been investing in ERW pipes and the other steel companies have been investing in the DI pipes for the water capex that's happening across the country. So any significant advantage that can you tell on the product basis the ERW holds against DI pipes?
No, sir. There are both are different things. The ERW, whatever we are putting only for oil and gas.
Okay.
The hydrocarbon sector, mostly city gas, we are aiming city gas business, which will be continued for next. Regarding ductile is a water pipes, different segment, local corporators are the client, and right now we do not have any program to go to in this country, in India, as a ductile pipe. So we are very clear, hydrocarbon sector, ERW, ductile is different thing, and it's difficult to comment for me this moment.
Okay, so no plan, and any plans to cater to the water pipes, anything?
No, water pipes, we have the spiral pipes plant, which we are doing around 10-15% of the revenue, and government is coming with a great water program, which is slowly will come up in future. But this moment, ductile, we do not have any program this moment.
Any guidance that how much can it be raised from 10 to 15% of your revenue? Any further guidance for that?
No, sir, but we have spiral capacity available. We would like to utilize that capacity which we still having. In hydrocarbon also we have the capacity, in spiral we have the capacity. So current year will be for us to utilize as much as possible to reach in the new heights. That is our objective. And then we will see any other products are coming for the growth of the company in the larger interest of the shareholders in the company.
Like also from the government orders and the government capex in water, the spiral pipes utilization, you have the optimum utilization in a X year. So that can you highlight that what percentage of revenue would that be of yours?
No, we can achieve water around in coming time, as I told you in the beginning, we are aiming around 25-30% growth without putting any new money. So then you can guess 2,200 crore into 30%, and as well as to ERW revenue will be separately. So then you can guess it, what is the guidance company and what we are doing. For our objective to utilize capacity as much as possible, in this capex, whatever we did already last 25 years, we can achieve much higher figure. Some bottlenecking was there where we have put 265 crore, including ERW pipe. So after bottlenecking, we will get some value-added products, some capacity more utilization, which we are doing. So without putting much money, we can achieve the bigger figure. Other segment, I do not know this moment. We will see in future. If any opportunities, then company will see.
So one more thing, like you said that there is still some capacity left for the utilization. So on a general question, if the current capacity is not fully utilized and you are doing the capex, so the interest and depreciation cost would have a much more impact on your bottom line. That will significantly degrade the valuations. So any comment on that?
Not going for any further capex in our existing capacities.
Whatever our product range, right now, I will clarify. Whatever our product range right now, we are not putting any money. Whatever we already put for upgradation of the plant and bottlenecking, which is done. Now the ERW is a different segment. Their revenue, their depreciation will be seven, and that segment is capable to face the better profit and to take care of depreciation, interest, everything. So no load would be over there, the existing capacity, amount, anything. So whatever will be, there will be the additional revenue, additional profitability, which will add to the shareholder, enhancement shareholder value.
Okay, sir. Thank you so much for your guidance. Thank you.
Thank you. Ladies and gentlemen, please restrict questions to 2 per participants only. The next question from the line of Jojo Sade with Alpha Invesco. Please go ahead. Your line is unmuted. The participant from Alpha Invesco, please go and ask your question.
Yeah.
Thank you. That was the last question, ladies and gentlemen. I now hand the conference over to Mr. Ramesh Mansukhani for closing comments. Over to you, sir.
Thank you everyone for your participation in our Q4 2022 ended earnings call. In case of any further queries, feel free to get in touch with us as a Pareto Capital. Thank you, sir. Thanks a lot for your time and patience hearing.
Thank you very much, sir. Ladies and gentlemen, on behalf of Man Industries India Limited, that concludes this conference. Thank you for joining us. You may now disconnect your line.
Thank you. Welcome.